Welcome, everybody. Steven Sitkowski here. Happy to have you for our Market Insights session. Share my screen with you. Hope all of you had an awesome weekend. It's gorgeous here. It is September the 30th, 2024. Quick reminder that everything we do is for educational purposes only. It is not intended as investment advice. So what's moving the markets? Well, the markets closed higher in September. That's kind of going against the grain. Typically, September is a negative return month. So we beat that, started off really sketchy. And then we also finished up for the third quarter on the S&P a little better than 5%. So all good there. Investors brace for October's volatility because we always need to have something to worry about. Typically, you'll see a rise in the VIX, which is the volatility index. You'll see more price movement, but October is generally a plus month for the market. China could be a big story moving forward. They have all kind of stimulus going on there. The government is committed to getting their economy kick-started. They generally do a pretty good job of that. 10-year Treasury is at 3.756. It's great for equities. And oil prices pretty steady at 67.89 per barrel. Kind of calm in the Middle East for right now, which has helped to bring those prices down just a bit. So what to watch this week? Things kind of pick up throughout the week. So we've got PMI number to be delivered. We've got Chairman Powell that'll be talking today. Tomorrow we've got a beat on manufacturing, job openings. That one will be interesting. The last report was 7.7 million. More Fed speak Wednesday. Get the ADP employment number and a bunch of Fed speak. Things start to get fun on Thursday. You have the initial jobless claims. You have the services PMI, factory orders coming out, and then Friday, U.S. non-farm payrolls. That's a biggie. It's kind of a litmus test for the economy. We'll get our latest unemployment rate. It's supposed to stay at 4.2%. See what's going on with hourly wages, supposed to tick down to 0.3%. Year over year wages, last reading was 3.8. So all that'll let us know kind of how the economy is doing. Last week's heat map, big winners were Tesla, up 5.67. Caterpillar had a nice week. FedEx, UPS, NVIDIA, AMD, Micron, Applied Materials, Apple did well, Amazon. And for the year, well, it's just been a sea of green minus energy, right? And minus Intel. Intel's starting to make a comeback. It has been recently. I'm doing covered calls on that right now. I think that stock is probably bottomed out based on the charts. It's not a buy recommendation. Market breadth, fantastic. Look at the new 52-week highs versus 52-week lows. 606 compared to 56, and 583 compared to 295. So whether we're looking at the New York Stock Exchange or the NASDAQ, both just great. Finding returns, it's been all about large cap growth. For 2 years, large cap growth. The winners for this week, a lot of it has to do with China. Wynn Resorts up 22%. Las Vegas Sands almost 22%. And then we work down from there. Tapestry, Bath and Body Works, Borg Warner, Tesla, Yum Brands, Lululemon, Aptiv and MGM Resorts. Materials definitely rallied last week. I'm wondering if some of these are getting to be overbought, like Freeport McMoran. Global savings rate. I thought this was really interesting. In the US, we save about 3% of what we make at present. In China, we're saving like 37% of what they make. And this is almost embarrassing. In the UK, they're saving about 9%. Germany, better than 10%. We're at 3%. AI forecasted to build throughout 2027. I always laugh at the people. You think AI is starting to kind of fizzle out? Are you out of your mind? That's like saying, do you think the internet's a fad? Right? It's going to grow at 22%. And it's going to take all those companies with it. First half of October is usually a very good 2-week period. So we get a lot of volatility, but we're normally up during that 2-week. Market sentiment, pretty darn strong. 49.6% bullish compared to historically 37.5. We're only at 23.7 bearish. How anybody could be bearish in this market is beyond me. Historically, we're at 31%. How much is Fed going to cut? This has been a big shift since last week. We're at about 60% probability that the Fed in November would cut 50 basis points. Now it's a 61% probability that we'll cut 25 basis points. Now it's going to be pending the economic data that comes in. But if the economy is humming along okay, frankly, there's no reason to cut more than 25 basis points. 1-year sector returns, so the average on the S&P, 33.67%. So if in the last 12 months you haven't made 34% on your money, you have underperformed the market. And the big winner has been technology. Remember when they were calling for the death of technology about 2 months ago? Oh, the prices are too high. Don't listen to the noise. Look at the data, right? It's like when somebody asks me my opinion of a stock, my answer is always the same. My opinion doesn't matter. You know what matters? What do we see on a chart? That's what matters. Speaking of which, let's look at the charts. And the SPY, things look pretty darn good. You know, if we were going to draw a couple of trend lines here, lower trend line, definitely in good shape. And the upper trend line kind of goes something like that. Also moving higher. So, you know, I see a little bit of rolling over right now. Markets never go straight up, but overall, nice and bullish. This is a 6-month chart that you are looking at. How about the Qs? Mostly big tech and well above the 50-day moving average. 50 days kind of starting to curl up. So, you know, both of these, I'd say mildly bullish at the moment. And track record for the first half of this year on our trade ideas with my trading partner. Pretty good shape. Number of trades closed, 74, average return almost 19% in 19.2 days. It's about 1% a day. Pretty cool. All right. Well, thanks for spending a little more time with me. I will be back, of course, next week. And until then, be safe, be blessed. Bye for now.